since 1900 all the way to 1975, it was a dime for a Campbell's soup. Can you believe that? 75 years they didn't raise the price, except for once right before the Great Depression, it looks like. How does that happen? 75 years of the same price of an item, and then after that, it just goes to 10 times, up to $1. All right. Good morning, everyone. Dan here with Tradingology.com in the trading room for October 7th, 2021. Good to see you guys coming back to you a second time this week, getting the trading rooms rolling back here in October after we had a little bit of time off running a high-level mentoring program with a great group of guys. And one of them's joining us with us today. Good to see you, Tom. Happy Thursday to you guys. And Dave, I see you coming in too. Good morning, sir. Hopefully you guys can see me and hear me. If you can't, let me know in the comments section. All right. Well, taking a quick peek at the internals. Boy, she's a happy day, and we're going to get to an interesting subject here, I think. But almost 2,000 positive on the internals on the New York Stock Exchange, coming up to 2,500 on the NASDAQ exchange. And then volume is all being controlled. Looks like pretty positive. A couple red candles on the NYSE, but so giving us a little bit of separation, but not a whole lot. Looks like it's going to be a pretty positive day based on more manufactured financing, because they're trying to say that the market rally is gaining steam because they're making progress. I'd like to know how that correlation exactly works. You know, suddenly businesses are doing well and stocks are doing well because Congress might have a deal. That seems fishy to me, but that's the world we live in today, right?
Yeah, these guys trot out the bears when the market goes down. They trot out the bulls. I mean, you know, they're a news agency. They have to come up with some excuse, right? If they only said, "Hey, there's more buyers than sellers today," goodbye. That's the end.
Right? Crazy talk.
Yeah, but I don't see. I mean, you know, yeah. I mean, look. If they don't raise the debt ceiling, they know what the implications are. I mean, the market could really fall apart. So they have to do something. You know, Yellen's, fear mongering that she did this week didn't really drive the market any lower. So they said, okay, well, we'll take it up then. Let's do something positive. We'll say, yeah, the debt ceiling's close. We're going to resolve this.
Yeah, we'll touch back on that. Since it is Thursday, I'll quickly look at our unemployment claims because their forecast was 350,000 more. So we're still up in triple digits. We haven't looked at it since we've been away for a while. But it's a green number because it's a little bit lower, but we'll see what they revise it to. But it is still 326,000 new unemployment claims being filed. So that's still not a healthy number, even though they say it's lower than they expected.
Well, you know, the one thing that they don't do with those numbers is they don't determine the workforce, the total workforce. So if they did it by percentage of the total workforce, which has declined significantly since 2008, and you have 10,000 baby boomers retiring every single day. So the workforce participation rate, which I think you can get on Fred, you know, the Fed database.
Yep.
I think if you look on there and you see the decline in the workforce participation rate, and then you take that unemployment number as a percentage of the workforce participation, that percentage of 326,000 has got to be pretty high, because even in 2008, when we hit 250,000 a week unemployment, the market went down 1,000 points in a day. I mean, that was a lot. And now it's at 326 with a lower number of people in the workforce.
Sure. Yeah, between that and, like you say, everybody retiring, and how many people are retiring ahead of time that weren't planning on it. So everything drives that baby boomer generation as they're reaching that. There's going to be an interesting change as that flows, because that's what's driven dynamics around the entire markets for the last 50 years.
That's right.
So what's going to be the next one when those move away? So that's a big shift in
Yeah, exactly. You're absolutely right, because I'm at the tail end of the baby boomer generation. I was born in 57. And I think that was the last year, I think, of the baby boomer kind of spread there. And I'll be 64 in December. So 64 and a half is like next June for me, next May for me.
Okay.
You know, at 64 and a half, you could retire. I could retire.
Yeah, actually, just recently switched over. It's interesting you mentioned that too, is you used to get your mailings every year. So here's where you're at, here's what it is. And I hadn't seen one for years. I'm like, did they stop doing that? So I did some checking and I pulled up, you can get it, it's all digital now instead of waiting for the mail. You can still get the mail, but yeah, you go to what is it, probably ssn.gov or something, but I won't pull it up right now because I don't have it open. But you can look at that. And now it used to be like 62 and a half and then 67. Like I think it claims my new retirement age would be 67. Tom says ssa.gov. Thank you, Tom. And yeah, so now they've moved it up to 67 already, but I can start pulling benefits, I think early as 59, I want to say it said. Then it goes on, but if you wait till you're 70 or 72, here's what you get. I'm like, yeah, we'll see. We'll see if I even get that far first. That's the first challenge.
I thought 62 and a half was like the earliest, and then 64 and a half was the time, the normal time.
Yeah, they took away those halves. Those are gone now.
Wow.
And now they have it broken up into every year. So each year is a different number. I found that interesting.
Yeah, I get my reports. In fact, I just got another one. Sure.
Yeah, so here's the ssa.gov you can pull up your services now.
I think as you get closer, they send it to you in the mail.
Yeah. So that's one of the things. If ever they did default and not raise this debt ceiling, which they've done every time, but there's always news about it, all of these checks would stop going out.
Yeah, it's not going to happen.
And I can't even imagine what that number is. I'm sure the number's somewhere that we could pull it up. Tom will tell me that website next. But yeah, can you imagine if suddenly everyone that's on Social Security as well as disability stopped getting those weekly or monthly checks, let alone the military? Like there was let me pull up the link that I sent you yesterday, because I thought they were, seriously, again, I think they're listening to us. Not really, but it's just hilarious coincidence.
Well, you just put it in the chat. We were talking about that yesterday, and then within like 15 minutes, that article went up.
Yeah, we were chatting about it. All of a sudden, here comes CNBC with an article saying, it would threaten national security, keeps troops. So it's also the military families, whether they're overseas or in country, would stop getting their monthly checks. So we had this defense secretary talking about it yesterday, saying, here's another reason why you can't. We know they're not going to. They're never going to not raise it. But why they make it such a circus every time is beyond me.
Yeah, I mean, they just kind of roll this out to scare everybody in Congress that, hey, look, this has got to get done, or things are going to get really, really bad. That's all they're doing. They're just strong arming them. It's
triggering another recession. And I don't remember who it was, but I saw someone else that was claiming they were getting ready for like another, I think they called it like Black Tuesday. Like they were seeing things lining up for another major drop, which we know is bound to happen sooner or later. With the financial manufacturing, the tricky thing is, right, is no one can predict when it's going to happen, because it's going to be not in the control of what they do. It's going to be, they're going to blame it on something else. But that's exactly what happened before. So I just think maybe they were going to let this be the big thing that blew it up if they didn't actually raise it and blame it on that, even though we know it's going to blow up no matter what. But I always just find it interesting that, to ponder the thought of what would happen if they didn't do it one time. Or didn't you say they did it one time? It's been years ago where the government actually shut down for a couple of weeks.
For a while back in the 80s and 90s, and maybe I think Tom's probably old enough to remember this. But anyway, back in the 80s and 90s, for a long time, they had to keep raising the debt ceiling. I mean, almost year by year by year by year. And so they just, there was a while, I don't know when it was, I can't remember, but I'm pretty sure it was in the 90s that they had to keep raising the debt ceiling. And for weeks, people were not getting paid. The government just totally shut down. And so it was a problem. I mean, it was a big problem. I don't remember exactly what the market did back then, but Tom says, I seem to recall once where we didn't get paid when he was in the Army, and that's why you have an emergency fund. Yeah. There's I believe it was sometime in the 90s, though. I don't think they did it in the 80s. But I mean, it was a big problem for a long time, because I don't know what the debt ceiling is now. What was it, 2.4 trillion, something like that.
I'll pull up the magic one.
Actually, we haven't looked at the clock, the world debt clock, in a long time. We could probably go over there and take a look at all kinds of good numbers. But it's just getting worse and worse. There's two things I put in the newsletter this morning. If you guys haven't, if anybody's watching this on YouTube, if you have not signed up for our newsletter, I put a lot of good information in that newsletter. Two of the things that a lot of people are talking about the stock market is, number one, is that there's a lot of cash on the sidelines. Well, that cash is generally in the hands of retail investors, but it's money managers that really kind of fuel this market, and through 401k investments and stuff like that. And they're at 1.8% cash right now. So there's not a huge amount of cash available in the markets right now in order to fuel additional gains. And if there is a pullback, obviously they're going to have to raise cash in order to do redemptions. The second thing is that, this whole thing with the Fed, everybody's kind of brushed it under the carpet right now with all the Fed insider trading, the Fed governors.
Yep.
A lot of them retired. That's going to cast a shadow over the Fed, I think, going forward. Even though it's not illegal, it was some considered to be unethical because they knew exactly what the Fed was buying and they actually went out and profited from it. So there's a potential there for that to continue to blow up. That was the one thing that's been holding the market together since 1982, the Fed statements and the veracity of those statements, right?
Right.
So we'll see. Okay, so national debt is, I can't even read that.
28.8.
28.8 what?
Let's see. 28 trillion. We'll probably see it hit 29 trillion if we stay here long enough. It'll probably go up that fast. It's going up
100,000.
Going up a million about every minute.
Yeah.
1 million per minute.
So official U.S. federal spending looks like 6.8 trillion. Budget deficit is 2.9 trillion.
Just go to trip 3.
Do they give you like historic data? So if you click on it, does it tell you what it was, or just the?
It just gives you the info underneath the covers as you mouse over it.
Yeah, the definition. Interestingly enough, the dollar to gold ratio down in the bottom right hand corner is at 21,330. I remember about a year and a half ago when we started doing the trading room. What was it, like 1,000 or something? Maybe
50, like 2, or I remember seeing it jump to like 5.
I know. I remember 6, and now it's at 21,000.
There was another interesting tweet that I forget who did it off the top of my head. I'm forgetting a lot today. Must be because I'm getting sick. But someone was throwing out the idea of they'll do like, excuse me, another 70s where they revalue gold before they confiscate it. Not that they could probably confiscate it anymore, but the theory was refactoring it to $40,000 an ounce.
Oh,
did you see that one? That was an interesting write-up, actually. Let me see if I can find that guy.
That's kind of interesting. Some other interesting things on here is that the total debt to GDP ratio is 140%. We're way overspent on GDP.
Wow, I thought it was just like 125 the other day too. Now it's at 140.
Yeah, I thought it was like, I remember last year when we crossed 100. So it's gone up since then to 140%.
Right. That's crazy.
Yeah, there's a lot of articles about 100%. Now it's 140. Unbelievable. Wow, look at that number on living in poverty. 36 million people.
Where's that one?
Down in the red on the right hand, just next to the silver gold ratios.
Oh, down here.
Yeah. Wow. That's a lot.
Well, luckily that's not a ticking one, which is surprising because everything's like a speedometer on here. Yeah.
Well, there's twice as many living in poverty as there are U.S. millionaires.
Yeah, data is measured as a yearly basis for a family of 4.
Wow.
29 million people without insurance.
29.
And foreclosures. We'll see if that changes. Have you seen anything recently? I haven't seen anything myself about forbearance and rent and that whole thing where they kept kicking that can down the road?
I have not. I think they're trying to keep it under wraps, or they're not really. There's not as many news articles and things like that online that I've seen. If you saw those Chinese videos, the videos on China, one of the things that they do that they do across China is control the media and the kind of news that they're going to report. And it's just it's crazy the way they do it. And I wouldn't be surprised if they're if they're suppressing, and especially the Wall Street Journal, which is owned by the stock exchange. Basically, it's owned by the stock exchange. If they're not suppressing certain types of news too. And a lot of the smaller newspapers, they all pick up from the National. So they'll pick up from the New York Times, Washington Post, and Wall Street Journal. And I haven't seen a whole lot of that. Not a whole lot at all.
Which I thought was also interesting on the Bloomberg one as I pull this one over, because they're saying the same thing. U.S. stocks advances debt and energy worries ease. How do energy worries ease that fast when there's still a huge shortage going into wintertime and everyone's going to be paying through the nose for natural gas?
Yeah, that was just yesterday morning.
Yeah.
when the Dow was down 350 points on the futures, right? And Europe was down almost 2% on the day. And I mean, I woke up at 5 o'clock and I saw the market down like 250 points, and it kept going down and down and down. Now it's the thing of the past. I mean, that was yesterday morning. So.
Right. Suddenly we fixed all that whole energy problem. Don't worry now. It'll be fine.
Yeah, I really feel bad for people in the UK because their energy prices are insane compared to ours. Yeah, we're at 670 or so. It pulled back a little bit yesterday, but natural gas, but they're at 25 or some ridiculous number.
Wow.
It's going to cost them $2,000 a month just to heat their homes.
Yeah. It's going to be like what happened in Texas when it froze last year.
Yeah. I mean,
I'm going to pull up your site here, Todd. We're speaking about gold. This is a great site. What happened in 1971?
Oh.
Can you imagine if the price of everything kept up with what it should be? This is a fun chart. I remember looking at this one before. It's when they took gold off the standard, right? There's look at Fred. Shares of gross domestic volume, compensation of employees, wage and salary disbursements to persons.
Wow. What is a decline in wages, share of the economy's income? Interesting.
Yeah, this is a great page. They put a lot of correlations in here. Or I shouldn't say correlations, but just a lot of different items and to compare what it changed.
Wow, look at that one. It's been flat since 1970 for median income.
Male income. Look at the male income and the female income.
Oh, female income's really caught up. Well, I think that's been a primary push,
Right.
But now it's like really outpacing. Yeah. Wow.
Real GDP. That is interesting. Good for them.
Yeah.
Cost of living. Haha.
They're probably just catching up at this point.
Right.
Cost of living. Yeah.
$2,600 a year for Harvard. There you go. Campbell's tomato soup. There you go. Look at that. Used to be a dime forever.
What I'd like to see is the actual number of cans in production. That's kind of interesting. I wonder if they can price artificially low just to spur me.
Yeah, here's our artificial inflation as of when you took the dollar off the gold standard. Boom. 2,300%. And that stops at 2015.
Oh, wow.
Imagine 7 more years on there. It's going to be up here at 3,000.
8,000, yeah. They're way up there.
There's the CPI. Electricity, food, and fruit. So fruit's expensive. Too much sugar in fruit. Don't eat that.
Yeah, it is.
Here's a Fred one. What do we got here?
Even fructose, though. I mean, they say sugar and fruit is better for you.
Tom just coughed. Sorry, Tom.
It's still sugar.
Average sales of homes sold compared to the federal minimum hourly wage of non-farm workers. There's the $20,000 mark that I went up to 60,000 right before the housing boom, and we still haven't recovered to that. That's an interesting chart.
Yeah, it is.
Still hasn't recovered. And what kind of boomer? Look at the boomer in the housing market right now. The other part that I found interesting is that information on Australia versus China. I had no idea they had that relationship. If anyone hasn't seen it, we won't have time to get through that today, but it's amazing how they've threatened Australia with nuclear problems.
Nuclear response. If Australia gets into the nuclear sub manufacturing industry, they're saying, well, they've got nukes. Well, they're building nuclear subs, but they're not building nuclear weapons. But China has threatened Australia, I guess, with some retaliation for building nuclear subs.
Occurrence of adjusted for inflation Google books. That's an interesting chart because how do you have that in 1980? I don't think there was Google books in 1980. There was no Google.
They extrapolated.
Maybe.
Currency crashes, huh? That's interesting.
But that one doesn't even go to 2000. They're just looking at what happened in 71. That's where it took off. This currency started crashing then after they take them off the gold standard.
That's also when the U.S. became the world reserve currency, wasn't it?
Right. It was funny that Yellen had actually mentioned that in her weird interview because she could hardly even keep words coming out in a proper form too.
Oh.
Whoa.
Oh.
There's the national debt one. Wow.
Oh, that makes me dizzy.
I can't even fit it on the screen.
Holy crap.
You gotta zoom it way back down even just to see it all at once.
Yeah. Oh, wow.
That's when you know we became a debt-driven society right there. Jeez.
That's pretty insane.
And that stops at 23. Let's wait till they put 2021 in there.
Yeah. That's insane.
All right, that's crazy. Thanks for that site, Tom. I think I've seen this one before. These guys do a great job. We'll post that link below for you guys catching the recording. Yeah. River Financial, thanks, guys. Back in Bitcoin. Let's see where we're ending up here.
Yeah, so we're up a nice 539 points. Inside month, you got that on a monthly. So right now it's inside month on the Dow at least. New low on the S&P 500. The Russell's
not as happy.
Not really moving much.
We'll drop these back to dailies for you.
Yeah. So the one thing I really want to look at as far as the real economy goes is the Russell, because they, those are the smaller mid-cap, smaller companies, small cap companies. And if they're not doing well, then the general economy is probably not going to do very well too.
Yeah, we got the SPY VIX floating right around 22. So that's dropped a little bit with the recent drop, but we got gap ups in a lot of the indexes today. So we'll see. Like we know, markets don't like gaps. So keep an eye out for that too.
Yeah, and a cash index on the S&P 500, there's a huge gap. It's 4364 all the way up to 4383. So a pretty good 20-point gap there.
Yeah, I'll pull up the daily there so you guys can see that.
And it's hitting one of my resistance targets at 44.29. We're almost at that right now. So
it's going to fill this gap, then it's going to drop. Is that a prediction? I don't know. We'll see.
It's possible. I mean, look at with the internals the way they are, they're pretty strong today. But filling that gap maybe. Because
we filled this one, but it didn't get it all the way.
Maybe that's where it's going now.
Maybe we're going to this one.
44.40. Yeah.
Let's see, where was the open there? Yeah, 44.41 and then 55 cents. Put a line on it.
Yeah, so maybe that's where it's going. But yeah, I mean, the market right now just seems like it's, I don't really have any clear direction. The newsletter I wrote this morning said we're 40% bullish and 60% bearish because we still have lower highs and lower lows. If you look at that daily chart in the S&P 500, you can see it pretty clear. You know, we got lower lows, we got lower highs, and you know, going all the way from the top there. So we're still in the definition of a downtrend.
Yeah, until it breaks these and until it gets another all-time high, maybe we'll go back up. We'll see with the manufacturing that happens, but we'll just keep you guys informed.
Yeah, so we got to close above that 44.60, whatever it is, 44.65 to get into a higher high.
Sideways market even. That would just be sideways at that point.
It would be, yeah. If we got up into that area, it'd still be, but it has to close above that 44.65. But we made a new low on this swing trade. So, you know, yeah, it's lower than the other lows. It's lower than the highs are lower. I just don't see, where the, even if they pass the infrastructure bill, which they haven't done yet, which is amazing. Actually, nobody's really talking about that. But hasn't Biden tried to get that passed since he got into office, like January 15th?
Yeah, I think he was making some moves either late last week or I think it was actually early this week where he was showing up and talking to people. Here's another interesting that might go along with that because look at what's creeping up on this. And I say long. Whoops, let me get that back there. This is the 10-year.
Right.
Remember where this trend line comes from. We know trend lines don't mean everything, but this is quite the major one where it goes back to years. It was built off of this guy, I think. But we're coming back up. We've hit it recently and it kicked right back down. But
yeah, we're getting really close to it. And if you compare that to the DXY, you see the DXY creeping up at the same time. So interesting.
10 years up, 2.5% plus today. Is it going to continue this move or is it going to, can they control the interest rates? They can't completely manufacture the 10-year, so this is going to be interesting to see.
And technically, the more times it hits that upper trend line, the greater the chance and probability that it's going to break through to the upside.
Break through and blast off, exactly. Because there's the 30-year. Look at the 30-year, which is going to affect mortgages and new home buys or just refis, everything. Yeah. That's been on a tear as well. That's creeping up. It's going to be 2.25% here pretty soon. And I think I saw just mortgages itself are above 3 again. So that's probably slowing down as well.
Yeah, absolutely.
The shorter term one, the 3-year here, they affect, which it did break through, but then it came back down, is now above, which I find interesting. And the red line is 0. Because we haven't done negative here yet. So the red line is 0.
Yeah.
So it can't go any lower. It's running out of room. The trend line has collapsed down to 0.
So is that a dead cat bounce or what? Because it's not really, it's not bouncing. I don't even think, it doesn't even look like it's 10% of the previous downtrend.
Right.
Right. That's pretty much of a dead cat bounce there. But it's bouncing off of the near 0 line. So, how much can it bounce? I guess. I don't know.
Yeah. Or are they ever going to actually say negative interest rates? No one's talking about that. It was a big thing when the rest of the world started doing it. They stopped talking about it here because who knows? This is probably when they were talking about it. Well, this is 2013. That's interesting. I didn't even look at that. Where it got down that low, then because it can't go lower. At least we haven't created the financial system for it to go lower if they ever announce negative. Holy cow, watch out.
Yeah.
That's a fun one.
Yeah, and then cryptocurrencies have bounced back pretty strongly too. Well, at least Bitcoin has. I don't know about the other cryptocurrencies. XLM has done pretty well. Bitcoin is back at 55.
Yeah, big run up, little drop down today so far, but we'll see. It's been on a tear from 40,000 there.
Yeah, pretty close to a 15,000 increase since the beginning of September. And then, Ethereum hasn't quite gotten as strong, but it's pretty good. 2,800 to 35.68. And XRP hasn't really done too much.
Some big wicks on it yesterday. Interesting wicks yesterday.
Yeah, it was. And XLM had a huge buy order yesterday, 12 million in about 5 minutes time period. So XLM actually went up quite a bit, from like 30 something to 34, 35.
So hopefully on these runs, people are taking some profits, learn their lesson. Don't hold forever, hold some, but take profits. That's my not advice because we're not financial advisors. But
Oh,
I would
you know,
take some profits if it was me.
well, you know what? Before we wrap up here, you got that, the poll I did? Do you have the finals on that? Let me
I saw that. Let me find your deal. Yeah. Excuse me.
it's in my Twitter profile. I pinned it to the top of my page. If you just want to navigate over there and make it easy for you.
So here's the question. What percentage is crypto part of your personal net worth? 67% said over 50% of their net worth is in crypto.
Shocked me. Absolutely shocked me. I couldn't believe it. I mean, there's more than I thought for sure there would be someplace between 5 and 25%, but greater than 50% at 67% on 221 votes. I mean, I've got 15,000 subscribers, but significantly more than I would have thought at 50% or greater, which just makes me think that what are people thinking?
Yeah.
You put 50% or more of your net worth, your personal net worth into crypto. That's
crazy town.
That's pretty weird. I mean, geez, there's people who put like maybe 50% of their net worth into real estate, or I don't even think people, even gold bugs, would not probably put more than 50% of their net worth in gold. I don't think so. Right? Everybody's going to have some gold.
Right.
Or silver. But more than 50% of your net worth?
Todd says he thinks crypto is a great way to build wealth, but I don't think it's a way to keep it there long term. Yeah, good idea. That's what I'm saying. Hopefully some of these people are learning and taking profits somewhere along the way.
We would hope so. I mean, I don't know if it's even a good way to build wealth. I have to disagree with you on that, Tom. I think it's a good way to trade to create profits, which I've done significantly, but I don't know if it's a way to build wealth. Although you do say long-term. Yeah, if you keep it long-term, or he goes, no, but I don't think I want to keep it there long-term. Okay, so see, to me, trading crypto is a way to create profits, short-term profits. But we don't really know who's going to win this cryptocurrency game. I think somebody's going to win it eventually. But putting it into like let's say Yahoo stock instead of Google, if you pick the wrong one, you're going to be in trouble long-term, I think.
Exactly.
Yeah.
There's just too many. What did we say? 7,000 of them now? We took a look at the list on Tuesday. Wow.
Yeah, it's unbelievable because 4,500. It was like 4,500 a year ago. So.
All right. Well, we're a little bit over our usual time, so I appreciate your time as always, Tom. It's good to see you coming out here. Good to see you guys. And if you guys got any questions along the way, feel free to hit us up. Either leave comments below here or hit us up at email support@tradingology.com. We're happy to help. And some interesting stuff coming. So I'll just leave that with you. We got some things brewing.
Absolutely. Thanks, Tom. Thanks, Dan. Talk to you guys soon.
Have a great weekend, everyone.
You too. Bye.